comes from Chairman Brib Bernanke. She says, breaking, S&P 500 hits all new all-time highs off news that things are bad and getting worse everywhere, all the time, forever. That kind of sums it up, doesn't it, on a daily basis? And for more on the economic outlook, Clifford Bennett from ACY Securities joins us now live. Clifford, great to have you on as always. Is it all doom and gloom out there, and despite these record highs that we're seeing, or is this recovery in full play?
That was a wonderful tweet, wasn't it? Look, I've actually come up with an explanation for it. I think basically US stocks are going high because there's a fear hedge. It's actually a lot of wealthy people, a lot of funds around the world are experiencing a terrible Delta surge. This is generating a lot of apprehension. And so people are thinking, well, the US has high vaccination rates and US stocks have been going up. So we're going to move our funds to the US stock market for the moment just to see how this whole Delta surge thing unfolds, regardless of what's actually happening for Delta in the US. So they see the US economy is remaining open, more resilient to lockdowns now than other parts of the world. So that's driving US stock market higher, stock prices higher out of fear, not good fundamentals, and not greed, which is a complete historical sort of paradox and a new experience for us all. And it's backed up by the very large capital flows now occurring into the US, back up to 1992 levels, when the US used to sort of draw in around 70%. Well, it was a little bit earlier than that, but at one stage the US was drawing in 70% of fresh available capital in the world. So that process is happening this time out of fear. And corporate earnings are strong in the short term because inflation is a result of businesses raising prices using supply chain disruption as an excuse to increase their profit margins. And that is the inflation that we're seeing. And it actually is a result of wider profit margins. So again, inflation, Delta is driving US stocks up. And inflation is actually driving US stocks up because it's giving them greater earnings in the short term. But of course, in the longer term, both those factors are a real dampener on our 1 to 3 year outlook. And so this rally in stocks is not sustainable, but how long is a piece of string? The Australian market's very different. I believe it's already topped out and it is at significant risk, and the Australian dollar at even greater risk to the downside now.
And so why do you think... Yeah, why do you see that divergence? Because some analysts have been calling the 8,000 mark on the local market. Why do you think the local equity market looks at risk at the moment?
Well, I think people are calling 8,000 on the local market because they're looking backward. They're referring to strong earnings, but earnings are about the past. And I don't know, I call what I do look out the window economics. And if I look out the window in Australia, I see nothing but recession, lockdown-driven recession. I believe we're already in a recession for Q3, Q4, and possibly extending into Q1. So it doesn't matter whether you agree with lockdowns or not. That is the state of play. That is the economic impact going forward. So I'm looking out the window. We can all see the world in lockdown, most of Southeast Australia now. And that is going to have a profound effect. There's not going to be a rapid recovery like last time. Everyone's lounge rooms are already stacked to the ceiling with sofas. You can't buy any new sofas or, continue buying new sofas, new furniture, new office equipment for the home, new televisions, all of that sort of rebound buying and stimulus measures for renovations and those sorts of things. They are on the wane now. They're sort of disappearing off. Stimulus is more targeted. We're not going to see the sharp rebound the Reserve Bank is expecting. Australia is already in a recession that's just started. So I think you have to be very mindful. And we saw it in the price action in the last 24 hours, the Australian market being heavy while the S&P 500 went to new highs. So we're already seeing that break away from following the US market. A lot of downside risk here, still seeing 70 cents for the Australian dollar as well.
So where is that investor play then? Is it short the market or is it short the Australian dollar?
Well, I think both of those are things that people should definitely be considering because they are also a way of hedging against the rest of your investment portfolio should the Australian economy head south in the way that I feel it will. The other thing is I do think the US economy is rolling over and slowing significantly. as will the global economy moderate. So a hedge on that scenario would be to sell oil, I would feel, certainly something worth considering. And another hedge against the Delta surge, creating just complete uncertainty and fear, if you like. I think we will see a move back to gold as the hedge for that, which is where it's about when US stocks will probably top out, is when you see US stocks topping out and gold starting to rally as we're seeing the gold rally. We're not quite seeing the US stock top out, but I basically think the fear hedge trade will move from US stocks, again, as I say, a historical anomaly, from US stocks to gold. So I see gold and black gold going in opposite directions. So I'm bullish gold, bearish oil at this stage.
Clifford, I love it. Thanks so much for joining us this morning, as always, from ACY Securities.
Thanks very much.